This video is for all you small business owners out there. My name is Zach. I'm the owner and founder of Carbon Digital Solutions. It's an IT company in the Denver metro area. But that's not what I'm here to talk about today. Today, I want to talk to you about the dangers of signing contracts or working with companies that may be a little predatory. Here in my hand is one such example of an advertising agency with what they say is a referral program. But once we get into the details, you're going to realize that it's a lot more than that, and it's not what you signed up for. Let's get started. I'm going to do a little bit of paraphrasing here so that I'm not reading this contract out verbatim. Obviously, it's legal language. It's a bit dry. So here we go. In the course of entering into separate contractual agreements with the other business, as defined below, refer service provider to the name of that business again from time to time as an independent contractor. Basically, they're going to employ you as an independent contractor through them to provide products, materials, and services to such customers as further set forth herein. They're basically saying, so you enter this agreement with us, and we're going to hire you as a contractor from time to time. Make sense? Yeah. Let's move on. Said business will market the services to third parties. Service provider shall have the right to accept or reject any third party for any or no reason. Service provider duties. Upon service provider's acceptance of a contractual agreement with their customer, that's going to become important here in the future. Service provider shall provide services to this company as set forth in a written agreement between service provider and the customer. Okay, so here they're saying if you accept one of these jobs, it's a contractual arrangement with the customer, and you shall provide those services to the customer as set forth in the agreement. All right. Then they go on to explain how you're going to get paid. And this is where it gets a little, I wouldn't do that. Okay. If a service provider meets their requirements to be a prime vendor, the service provider shall pay to the other company a commission equal to 10% of the gross revenue realized by the service provider. And that's what they told me, 10% fee of gross. All right, another important thing to keep in mind here, they're taking off the top, just right off your gross, without any consideration for the cost of your services, your overhead, anything like that. So bear that in mind, right? So as a prime vendor, you'll pay a commission to the other company within 15 days after the end of each month for all commissions earned. If you are not one of their prime providers, okay, meaning that you had an annual gross revenue below $5 million in the preceding calendar year, we're small businesses, most of us probably aren't making that, and you employ one or more full-time bookkeepers who manage the company's finances, and you have a credit score, an Experian business credit score of 76 or higher, FICO small business score of 155. All right, so those are the requirements for their prime vendor. All right, so if you're below this, you're going to go into the other category. All right. If the service provider doesn't meet their qualifications, okay, the customer shall pay them directly and shall so indicate in the written agreement between the service provider and the other company for all services provided by the service provider to the customer. Then The other company will pay you as a service provider a fee for the services provided. All right. Straightforward, I suppose. The customer pays them, then they pay you. That's kind of a bad deal already for a small business owner who may need that cash flow quickly to cover the expenses of the project or whatever else they were doing. The service provider fee shall be equal to the gross revenue received from the customer minus the other business's commission minus a payment processing fee and a platform fee. So it's not 10%. From what we're seeing here, it's probably at least 11% plus whatever the other charges are. So maybe 12, 13, 15. Who knows? Because this is also taken off the gross, which it doesn't make any sense. The payment processing fee should probably just be on the total of the payment that you're paying out to the contractor, right? I was on the phone with somebody a little higher up in the company to discuss the contract, and those were the details they gave me. Still, what? Really? And then here's the next language: minus any other applicable fees. The other company may charge service providers other fees on a one-time, recurring, or periodic basis. Mystery line item. That's what that's saying. We're not going to tell you what this is, but we're going to make sure we charge you for it. The payment processing fee may vary depending on the method of payment and transaction volume. Are they charging you for an ACH? Because my bank don't do that. Here's the next gotcha. The service provider fee, that's what you're being paid after all this is said and done, is earned 90 days after the other company receives payment from the customer. However, the other company shall pay a service provider in advance on the service provided within 3 business days of receiving payment. How long is that going to take? Some of the projects I work on, like, we need the cash to be able to order all of the equipment and the servers and the supplies and everything else that goes along with being in IT. If the other company has paid a service provider an advance on the service provider fee, so they can give you an advance, right? But here's the next gotcha. The customer, if they dispute any charges, or if the customer's payment is dishonored or is returned for any reason, the other company may reconcile the advance paid to the service provider by debiting it from the service provider's account. So they can just take the money they've given you without warning. You can see how this might be a problem, but it gets worse. Right to audit. Audit rights and reporting requirements. The other company shall have the right to review and approve any service contracts entered into by and between service providers and the customer. The service provider shall provide a monthly summary of gross revenue collected from their customers' transactions, the calculation of the commissions and any adjustments thereto by the 15th day after the end of each month. Every 6 months, the service provider shall submit transaction reports which contain the names and addresses of the other business's customers. So what they're trying to do here is enforce their interest in owning that customer. So, we're already way beyond this being a referral, right? Generally, how that works, right? Somebody refers you, you do business with the customer. That customer can then do business with you again and again and again. It doesn't matter. And if you do compensate the other guys, it's through a referral fee. Say, okay, here's, I don't know, $75 for the referral, right? Depends on the business model, depends on what you're doing, right? On average, it costs me about $75 to $80 to acquire a new customer. I know that just because of the work I've been doing, all the networking, everything that goes into it. Generally, on average, 70, $80 a customer. Okay. So you're paying them 10% of the gross revenue from this business. And in return, you're getting nothing except for one quick sale. That's kind of a high price to pay. Additionally, the other company or its designated agents may from time to time and for a period of 1 year following the termination or expiration of this agreement. 1 year. They're still going to be auditing you after you terminate the contract a year later. Wild. Audit during normal business hours and upon not less than 5 business days, advance written notice to the service provider. All books and records of service provider that are of direct relevance to service provider's fulfillment of its obligation under this agreement, service provider's authorized representatives or designated agents shall have the right to be present during any such audit. And then I go into non-compliance. We can guess they're going to stick it to you, right? Now, when you are a 1099 independent contractor, there are certain things that a company can and can't do. I'm sure many of you are familiar with what they are. I won't spell them out in this video. But in this case, we're not going to get into that. I'm going to skip this part here. This is explaining if you have people who are working under you, what their relationship is with this other company. Okay, you're to obtain all the required building and construction permits. Service provider shall be solely responsible for knowing the tax consequences, blah, blah, blah. That's fine. Okay, the insurance requirements. They want you to have a certain amount of liability in your commercial general policy. Great. Mandating whether or not people have passed background checks. Okay, fair enough. A non-solicitation clause here. Keep in mind, you're not their employee. You're in a 1099 relationship with them. And this to me sounds like a rotten deal. Non-solicitation for the other company's customers. During the term of this agreement and for a period of 12 months after the termination, for any reason of this agreement, service provider agrees not to, without prior written consent from the other company, solicit, induce, attempt to induce, or provide any services to, on its own behalf or on behalf of another person or entity, any of the other company's customers with whom service providers had dealings with and or for whom service provider performs services pursuant to this agreement. The rest is about indemnification, the usual stuff you'll see in these contracts, limitations of liability, okay, events of default, severability, and that's all your normal legal mumbo jumbo here. All right, and that puts us to the end of the contract. Okay, so to recap, They want you to pay them a bunch of money for giving out a phone number and a name. And then they want to tell you that you can't even work with those customers again unless it's through them. That's not the way my business operates. That opens up the door to errors and omissions, for example, right? Because if I need to tell the customer I found other problems and we're going to need to fix them, it could be network security problems, could be a firewall misconfiguration, it could be an unsecure piece of equipment on the network, you name it. By recommending those repairs, I may be opening myself up to problems under this contract. No, thank you. The reason I'm reading this whole contract and talking about it on YouTube is because as small business owners, there are a lot of bigger companies that are willing to come in and bully you out of your income. As small business owners, that's unacceptable. We can't do business with people who are going to take advantage of us because they're also taking advantage of the customer. In this occasion, right, they're claiming ownership of that customer. So I go in there, I do a really great job like I usually do, and they call me up and say, hey, we've got another project. Would you like to be a part of it? I can't. Not without written consent from these guys. And then I'm paying them another 10%. You know, when you think about the cost of acquisition on a customer, like I had talked about earlier, that's a one-time cost. Once you've got the customer, you keep them in your pipeline using, emails, regular calls, follow-ups, whatever your process is to, stay front of mind with them. But the cost to acquire them is already done. In this case, you're paying it again and again and again. Tell me that's not a bad deal. What do you guys think? Leave a message in the comments below.